The U.S. economy added 130,000 jobs last month. That's well above economist estimates of 55, a tick below estimates. And joining me now to share more about this is Greg Faranello. He's the head of U.S. rates at AmeriVet Securities. Greg, welcome to the New York Stock Exchange.
Ashley, thank you for having me again.
So what are you taking away from this report?
It's better than expected, clearly. If you look at the unemployment rate, if you look at Fed policy, the Fed is going to follow the unemployment rate, which ticked down to 4.3. So we look at this report as very constructive, short term, and we look at the Fed on hold right now. There's nothing for the Fed to do here with the unemployment rate of 4.3%.
Do you think it's going to affect potential rate cuts moving forward, this number this month?
Well, it could, and you and I talked about this a little bit before the segment. What gets the Fed lower from here is really, I think, inflation in the end, excuse me. And if inflation is able to come down in conjunction with a strong job market, then the Fed is going to have some room. And if inflation doesn't come down in conjunction with a strong economy, then the Fed is probably going to be on hold here for a long time.
And I understand you believe that the Fed has room to cut rates closer to 3%. That's about 50 basis points from where we are now. What would justify that, and how soon can we see it?
Well, I view it as similar to last year. It's more of a back-end endeavor, I think, for the Fed. And they're going to wait and see here. You have Chair Powell. You're going to have Chair Warsh, I think, ultimately in the end. There is going to be a bias for rates to come down, but the economic data needs to cooperate for that to happen. And I think it's more inflation at this point than anything else. If the administration is able to orchestrate a strong economy with lower inflation, then I think rates will have the ability to come down. But that sort of 3% level, if you go back historically and if you look at a more normalized rate structure, which I think we're in right now, 3 to 3.25, that's kind of where we've been over time.
All right, and I know you're bullish on the economy. You say that we're in a good place. What data points are telling you that?
I think the economy is in a good place. I think a lot of the policies that were put in place in 2025 have yet to come to fruition. I think they will come to fruition this year. So when you look at the legislation, when you look at what's coming out of Washington in general, when you look at even interest rate policy, I mean, rates have come down quite a bit, really, from the peak. So we are bullish on the economy. If you look at capital market activity in general, if you look at the debt capital markets, if you look at the equity capital markets, if you look at overall activity right now, it's very, very strong. And if you look at the regulatory environment, which I think is going to be very conducive in 2026, we expect this to be a very, very good year. It's not going to be a straight line. It's going to be a little choppy, but we expect it to be a good year.
And we have an IPO here at the New York Stock Exchange, AGI. It's a Brazilian fintech, is going public.
Awesome.
What is your outlook on the IPO market for 2026?
I think it's strong. You know, I think it's good. I mean, when I look at our equity capital market business, it's definitely strong. Last year was a little difficult, but in general, I think the equity capital markets are going to be very strong. You're going to see more consolidation over time. We're seeing that already because the regulatory environment is good, but it's going to be a good market for. And
you've also said that inflation isn't a problem at this stage. What are you seeing that tells you that price pressures are easing?
Well, we talk to mainly institutional clients. What I try and do is I try and talk to individuals too, on top of that. And the consumer, I think, is a little tapped out here in terms of inflation in general, required inflation. If you look at homeowners insurance, if you look at car insurance, if you look at things that people need to have in place, pricing has gone up. So the overall pricing structure has gone up over the last 4 years. Year over year, we've come down, but I don't see inflation as the problem here at all. I think, if anything, the Fed is going to hedge toward the labor market going forward, but we don't see inflation as a problem here going forward.
Speaking of inflation, CPI data is coming out on Friday,
yes.
Delayed from January. What are you anticipating?
Look, I mean, inflation in general is a little elevated right now in terms of the Fed's target, right? They want inflation down to 2% in general, but depending on how you look at the inflation numbers, we're probably unlikely to get down to that 2% target. So we're running, if you look at core inflation really across the board, we're running 2.5% to 3%. GDP is running hot, and that's why when you look at 10-year yields at 4.20, that's why yields are having a tough time coming down, at least on the long end.
Given all of the economic headwinds, what do you think investors need to keep in mind as they navigate the markets?
For this year?
Yeah.
Look, it's going to be a good year. I think, when I look at AI, I look at that as one particular bucket in terms of an allocation, in terms of where you need to be. You need to have exposure there. But when I look at broader markets right now, we are broadening out, and I think we are broadening out because the economy is doing really, really well. So you can't put all your eggs in one basket. It's not all about AI. AI is going to be a very influential tool going forward, but the broader economy is doing well here. So,
any other sectors you have your eye on?
Look, defense is definitely an area that you have to focus on here. I mean, whether it's here or abroad, I think the defense sector is something that's going to be a key focus going forward. And, healthcare, I mean, there are so many different places to put your money. And I think much of the narrative, much of the focus has been on AI. And I think you need to be allocated to AI, but you also need to look at the broader economy as a whole.
All right, Greg Faranello, head of U.S. rates at AmeriVet Securities. Thank you so much for joining us on NYSE Live.
Thank you, Ashley.